You've probably noticed many price moves look like they're about to break out near highs or lows, but then, in the next second, they reverse sharply. Is the problem really your direction call? No. The real problem is you're not reading what a single candlestick is actually signaling. Today, I'll show you how to use candle range theory to tell in advance whether it's a real breakout or a liquidity trap. Welcome to Cheese Talk. No emotions, only structure, risk, and data. In traditional structure analysis, we define a range using the high and low of a period. But the core idea of candle range theory is that each candlestick is a complete trading range on its own. For example, the high and low of a daily candle often correspond perfectly to the high and low of a swing on the hourly chart. This means the wicks are essentially two liquidity targets. A standard CRT structure usually starts with a range-defining candle. High point, candle range high. Low point, candle range low. The key is the second candle. If price sweeps the range high, but fails to close above it, this usually means buy-side liquidity is exhausted, and the market is more likely to test the range low. I don't chase the low of the second candle. That's high risk. On lower time frames, I focus on three things: liquidity sweep, change of character, bearish fair value gap. The actual entry is inside the FVG, with the target clearly set at the candle range low. CRT doesn't require exactly 3 candles. What really matters is whether the market shows an AMD structure: accumulation, manipulation, distribution. As long as the structure holds, time is relative. The number of candles doesn't matter. On higher time frames, do just one thing: define the candle range. On lower time frames, you decide whether the structure is valid and worth entering. We call this time frame alignment. For those unfamiliar, this is the optimal time frame combination. For example, when analyzing a 4-hour chart, look for entry opportunities on the 15-minute chart. If CRT conflicts with higher time frame PD arrays, I don't take the trade. CRT is a confirmation tool, not a prediction tool. It works best during liquidity attacks at key levels. If this framework adds clarity to your trading, subscribe to the channel. I'll keep breaking down the structures that actually move markets.